Stacks is an open-source blockchain network that introduces smart contracts, decentralized applications, and NFTs to Bitcoin. This blockchain project aims to unleash the full potential of Bitcoin as a programmable base layer for the decentralized web. As you know, Bitcoin is great for storing and transferring value. But as a blockchain, it's not very flexible or programmable. It doesn't have a native smart contract language or a way to run complex applications on its network. This is where other blockchains like Ethereum, Cardano, Solana, and so on thrive. But what if you could have the best of both worlds? What if you could use Bitcoin security, liquidity, and network effect and also enjoy the benefits of smart contracts, dApps, and NFTs? That's where Stacks comes in. How does Stacks do that? And what makes it unique among other programmable blockchains? Also, is it a noteworthy investment? Stick around until the end of the video and you'll find out. Without further ado, let's get started. Stacks has a long and interesting development history that dates back to 2013. That's when co-founders Muneeb Ali and Brian Shea started working on the idea of building a decentralized web platform on top of Bitcoin at Princeton University's computer science department. They originally named their project Blockstack and released the platform design in 2015. Since then, they have been working hard on research and development, securing funding, launching testnets and mainnets, holding token sales, rebranding, and partnering with leading crypto organizations. Some of the main milestones of their journey are, in 2018, they launched the first testnet and mainnet for their blockchain, called the Blockstack. In 2019, they held the first token offering qualified by the US Securities and Exchange Commission, raising $23 million from over 4,500 investors. In 2020, they rebranded from Blockstack to Stacks, reflecting their vision of building a user-owned internet on Bitcoin. In 2021, they launched Stacks 2.0, a major upgrade that introduced new features and improvements to their network. Now that we have some background information on Stacks, let's take a look at its core features and how it works. Stacks is an ingenious platform that empowers you to delve into the realms of DeFi, NFTs, and smart contracts for Bitcoin. With the seamless integration of the Bitcoin blockchain and the cutting-edge Stacks 2.0 protocol, Stacks offers a decentralized avenue for building on Bitcoin that is both rock-solid in terms of security and effortlessly scalable. Stacks has several unique features that make it stand out from other programmable blockchains. Some of them include proof of transfer, microblocks, clarity, and stacking. First off, proof of transfer is a novel consensus mechanism that recycles Bitcoin's proof-of-work systems and enables SDX holders to participate in consensus and earn Bitcoin rewards. Proof of transfer makes Stacks highly scalable and decentralized without causing additional environmental impact. Next is microblocks, which is a technique that speeds up transaction processing by dividing blocks into smaller batches that can be confirmed in seconds. Microblocks reduce latency and increase throughput on the network. Stacks also features what's called clarity, which is a smart contract language that allows users to set up their own conditions for transactions and avoids common errors and vulnerabilities. Clarity is designed to be predictable, secure, and easy to audit. Instead of staking, Stacks features a system called stacking, which is a process that allows SDX holders to lock their tokens for a certain period and receive Bitcoin rewards from the network. Stacking aligns the incentives of SDX holders with the security of Bitcoin. So what can you do with Stacks? Well, pretty much anything you can imagine on Bitcoin. Plus, Stacks enables various use cases and applications for Bitcoin that were not possible before. Some examples include using decentralized finance products. For instance, you can use Stacks to access Bitcoin-based stablecoins, yield farming, decentralized exchanges, and more. Using non-fungible tokens. For instance, you can use Stacks to create and collect Bitcoin-based NFTs, such as Bitcoin ordinals. Stacks also enables decentralized applications that run on smart contracts and offer various functionalities. With Stacks, you can build and use dApps that leverage Bitcoin's state and security, such as Pravica, Boom, Sigil, and more. Finally, Stacks allows for DAO creation on Bitcoin. One popular example of a DAO operating on the Bitcoin network is the Stacks Foundation. Away from functionality now, how secure and private is Stacks? Well, very secure and very private, and here's why. Stacks inherits Bitcoin's high level of security since its transactions are settled on Bitcoin's blockchain. Bitcoin is one of the most secure networks in the world because it uses a proof-of-work system that requires a lot of computational power to attack or manipulate. As we've mentioned, Stacks also uses Clarity as a smart contract language to prevent common bugs and exploits that have plagued other smart contract platforms. Meanwhile, Stacks shows it respects user privacy by allowing them to control their own data and identity through a decentralized authentication system called Blockstack ID. Users can also choose which applications they want to share their data with and revoke access at any time. Furthermore, users can benefit from privacy-enhancing features such as Tor integration and anonymous transactions. Now that you have a basic understanding of what Stacks is, how it works, and how it's secured, let's talk about why it could be the one to look out for in the near future. Here are some of the factors that make STX unique and attractive compared to other tokens right now. The first factor is that STX has regulatory clarity. STX is the very first token to be distributed via an SEC-compliant offering in US history. This means that STX has complied with the securities laws and regulations in the US, which gives it legitimacy and credibility in the eyes of investors and regulators. This is particularly important considering the recent crackdown spree seen with the SEC. This pretty much reduces the risk of legal challenges or crackdowns that could affect other cryptocurrencies that are not compliant. Next is Bitcoin compatibility. As we recently mentioned, STX leverages the security and scalability of Bitcoin without changing its core features or requiring a hard fork. This means that STX inherits the trust and reliability of Bitcoin, which has proven itself to be the most resilient and decentralized network in the world. This also means that STX can benefit from the network effects and adoption of Bitcoin, which has millions of users and billions of dollars in value. This is a salient advantage for STX, especially with the increasing clamor for a Bitcoin spot ETF and the recent ETF filings by big names such as BlackRock. STX also stands to benefit from the frenzy leading up to Bitcoin's halving in the first half of 2024. Apart from leveraging Bitcoin's goodwill, STX also has a vibrant developer community and ecosystem. Currently, there are over 100 dApps built on Stacks, ranging from DeFi and NFTs to social media, and hundreds of nodes running on the network. To make the argument for STX even more convincing, let's explore the exciting roadmap that lies ahead for Stacks. Interestingly, the team behind Stacks only recently released the roadmap for the project. This roadmap contains 2 new white papers that propose the next major milestones for the networks, SBTC and the Nakamoto release. To start with, SBTC is a trustless two-way Bitcoin peg system that enables users to move their Bitcoin in and out of the Stacks layer without relying on any intermediaries or custodians. SBTC is the missing piece of the puzzle that can unlock hundreds of billions in Bitcoin capital for Web3 applications and smart contracts. With SBTC, users can enjoy the full functionality and expressiveness of Stacks while maintaining their exposure to Bitcoin. Next, the Nakamoto release is a set of changes to the Stacks Bitcoin layer that would enable faster block times, Bitcoin finality, and improved scalability for the network. The Nakamoto release would also support the trustless functioning of SBTC by allowing users to verify their own proofs of transfer without relying on any third parties. These 2 proposals are game changers for the Bitcoin economy. They would enable a new wave of innovation and growth for Bitcoin layers without compromising the security or values of Bitcoin. They would also make Stacks the most powerful and user-friendly platform for building on Bitcoin. When it comes to smart contract platforms, Stacks stands out from the crowd. It's not your typical run-of-the-mill platform. It goes beyond that by serving as a bridge between Bitcoin and the decentralized web. This unique feature alone sets it apart and positions it for significant growth and widespread adoption in the months and years ahead. It's a big deal, no doubt about it. Apart from that, STX holds a lot of potential. One of its crowning advantages over most other crypto tokens is its immunity to regulatory pressure, thanks to its recognition by the SEC. This is especially helpful considering all that's been going on in the crypto space, regulatory-wise. As such, Stacks is definitely a project worth keeping an eye on in the future. That's all for today's video. If you found our video informative, then please like the video, subscribe to our channel, and press the bell icon to get updates on all our future videos.